Good morning. It is Mark Sebastian. I am your only option, and welcome to Ticker Highlight Show. I am joined, as always, by one Queen of the Candles, Leisha J. Leslie, and of course, the Viking of Volatility, the Vicar of the Vix, one Andrew T. Giovinazzi. Good morning. I hope everybody had a great weekend.
We did. I had a lot of family, so it was it's vacation, but it's not vacation.
Well, you're hosting, so it's not a vacation for you. It's a vacation for them.
Yes, I realize that. Actually, I've taken a little vacation time this year, and not one day have I just done nothing. It's
all right. Well,
we gotta
arrange that for me.
Everything is. I have not taken a vacation in 2 years.
All right. Well, we got to arrange that.
Do anything.
We're going to work on that.
It's all right.
We're going to work on that. Good morning, Lee.
You know what? I just rather be trading. It's easier. I trade and the bell rings.
Nobody bothers you.
It's easier. It's just easier, dude.
Good morning, Leisha. I hope you're doing great. Do you have a nice weekend?
Traveling.
Nice. I saw Deadpool for the second time. It was great again.
Yeah.
Was it good?
I've seen it twice, and I'm probably going to see it 4 or 5 times in the theater. It is.
Oh, really?
It is,
so it's worth it, you think?
It is one. It's really violent, but it's really, really funny, and it's got a lot of good jokes. If you like pop culture jokes, and you're into comics, there's a lot of good jokes. It's worth your time. I bet you your 2 older boys would probably. You should take.
Yeah, because they like those. Maybe we'll go, dude. That's a good event. I like.
Oh
that.
yeah. Oh, absolutely, absolutely. And actually, I think even Lydia would probably like it.
She totally likes those. She likes the Marvel superheroes.
Oh yeah, take the family. Take the family. It's worth it. I mean, it's like I said, very lewd, very bloody, and very gross, but also extremely funny. So,
first R-rated movie that did $1 billion worldwide.
Well,
that's what
kids. Let me be very clear. Andrew's kids are all 16, 17, or into their 20s. All right. I'm not suggesting you take your 6-year-old. Valentino is not attending Deadpool. Let me be very clear.
Yeah, my kids are. They're all 2 of them are in college. So
yeah, exactly. So no, this is high school and above. It is appropriate for.
Gotcha.
I'll say that. Mark is just on the line because he's gonna be a freshman. Otherwise, I wouldn't have taken him.
Oh wow! So you took Mark, huh?
I did. Well, I needed somebody to go with. Anywho, before we go down the Deadpool rabbit hole, I want to dig into this week's topic, which is volatility, because obviously the last week I think you would describe as volatile. Outside of Friday, we didn't have a single day that didn't have a over 100-point range. Andrew, we went 300 and some odd days without a 2% move. And then we get a 2% move every day for 2 weeks straight.
Yep.
So I want to start by just kind of briefly introducing you to what volatility is. So when we talk about volatility, you're going to hear discussed in kind of 2 main forms. All right. The first one is this purple line. And there are different ones. The purple, we'll introduce a couple of them. So these different lines, you'll see them called historical volatility, or you'll hear it called realized volatility. They're used pretty interchangeably. And what they represent is how much the market is moving on a daily basis. So most analytics that you see that are measuring historical volatility, they look at a period of time. In this case, we're looking at 10, 20, and 120 days. And they measure on Monday, we closed here. On Tuesday, we closed here. How much movement was that? And then they group the previous 10 days and that tells you how much we've been moving over the previous 10 days. So that's 10-day historical volatility, 10-day realized. The previous 20 days, 20-day historical, 20-day realized. 120 is going to be obviously the previous 120. And what you'll notice is the further out in time you go, the more smooth these numbers get and the less noise there is. So if I pull out the near dated ones, you'll notice that these guys don't, 120 and 360 really don't move around that much. I'm just going to go to 2 years so that you're not, you'll get some range, but they move much slower and they give you a better feel for kind of what's happening overall in terms of the general overall market trend. Near dated, so call it the 20 and 10, they're much more noisy, but they give you a better reference for kind of what's happening right now. And so you would look at where we are and you'd say, okay, we're volatile right now. Markets are moving around. The next concept is implied volatility. Now, implied volatility is what the market's best guess of what volatility will be going forward. Now, I don't want to dig into the model. I want to get all kinds of craziness. But if I look at options and what they're pricing, implied volatility is the output of what options are guessing the market is going to move at. So think of when you look at the implied volatility is here's what all the players in the market think the movement is going to be like over the next 30 days. So when I say IV30, that's the market's best guess at how the market is going to move over the next 30 calendar days. Now, one important thing to be aware of is that historical volatility is trading days and implied volatility is calendar days. So when you're looking at 30-day implied, you're actually really looking at 21-day historical. If you want to go back and compare. So if I were to compare, let's say I'm going to go back 3 months and I'm just going to, and implied volatility is wrong sometimes. So let's go to July. Let's see, what was 20 days ago? Today's the 12th. So on July 12th, implied volatility was guessing that the next 30 days, we're going to move at a 9.95% volatility. Leisha and Andrew, did we move at a 9.95% volatility?
Not even close.
Not even close. And you can see what the output is. Look, we actually doubled that. So implied volatility can be wrong. It can be very wrong. And it tends to overreact. So and typically it trades at a premium until volatility explodes, and then it trades at a discount. So generally, movement is going to be less than what is priced in, just like insurance, right? Car insurance companies charge you a little bit more than their expected cost. Options do the same thing. Options are an insurance product. All right, so lastly, what is the VIX? You hear the VIX talked about, it's the volatility index. What does that mean? Well, back in the day, there weren't all these pretty analytic platforms, and the SIBO wanted to get people looking at option prices and option volatility, and they wanted people to be able to have an understanding of where option prices were trading. So they developed the VIX index, and the VIX index is a index that measures option implied volatility across every option that has a bid on it in the S&P 500 with a constant duration of 30 days. That means in today, the VIX expires in 30 days. Tomorrow, the VIX expires in 30 days. In 10 years, the VIX will have 30 days to expire. It never expires, but it always has 30 days to expire. And so it's telling you what options 30 days out have to expire. And so when the VIX explodes, that tells you the market is under stress. And when the VIX is at low points, that's telling you it's not very expensive to hedge a portfolio. Where volatility is right now, it is relative to where we've been over the last few months. It is elevated. You would argue it's high. Relative to movement, not exceptionally high, but relative to where we've been, a 19 VIX is high. Coming off of an explosion like we saw where VIX got to 65, typically you don't see it go to 65 and then go right back to 15. So my take is we may get another leg here, but that has yet to materialize. And sometimes we get these weird mechanical, market force liquidations. They can dissipate quickly. So that's where we are now in terms of what I'm viewing. So with that, I'm going to hand things off to Leisha, and she's going to look, because you can't really talk VIX without talking about what's happening in the S&P 500 and the Qs. And she's also going to talk about VIX and VIX futures. VIX futures are the tradable portion of the VIX. You can't trade the VIX itself, but they do have VIX futures, which are a bet on where VIX will be when that contract expires. So, Leisha, what are you seeing?
We're seeing a nice little rally here today, aren't we? My computer's very slow here in Arkansas, as you can see. Oh,
Do we insert an Arkansas joke here?
yeah, you can. I don't know why this isn't responding. We're getting a little rally. Mark, you didn't talk about. I would add to the conversation what I wrote up is the way VIX and all implied vols are mean reverting, meaning they go back. They
Yes.
pop, they drop, they come back to a general area where they normally trade, normally, quote unquote, right? All stocks have that same thing. I was just writing about this today in the masterclass. We're talking about volatility. Stocks have their normal implied vol also, and those liquidity providers know what that is. As soon as you get a pop, they're selling it. As soon as it's, as it goes down, they're probably buying it all the way down, obviously, but not always. But stocks, indices, all of them have a general, what their normal implied vol is. And Andrew can explain where VIX's normal implied vol is, but I'll let him explain that. So
Yes,
for that
mean reversion
reason,
piece is very important. I appreciate you bringing that up.
for that
Didn't mean to leave that out.
reason, I thought you left it for me.
Oh, well, good.
There's
Well,
a special.
Let's
There's
just
a
say I
special.
did. Let's
Yeah.
just say I did.
He did. He left it for you, Leisha.
My trading view is not responding here. I don't know what the hell's going on. Let me see here. Sorry. So for that reason, to look at the charts for VIX is pretty much a moot point, right? We can't really put any pitchforks on VIX.
Right.
Well, another problem is it really does. It has like an odd liquidity factor. One thing about using chart like standard charts is you get liquidity comes in and out. There's exhaustion, and all that kind of stuff. Vol doesn't quite work like that. But that's my 2 cents anyway.
Right. Well, obviously I shouldn't say obviously. The S&P 500, which the VIX is measuring the options implied volatility S&P 500 options, can move much more quickly than a stock. Although we do get high flying stocks that'll move faster too. But we don't generally chart implied vols, but that's what the VIX does, right?
Yep.
I
Right.
say we have a rally, and I keep saying, and I think we may have to trade 5,400 to 5,440 to 50 before, if we decide to roll over and trade down to 5,000 here. That's what I'm thinking.
Yeah, I mean, it was incredible. We closed on the 2nd at 53.46, closed on the 9th at 53.44. If you went on vacation and didn't look at the markets, you thought nothing happened.
Right, right.
Uh,
So here you have, here's the VIX for, look how long the VIX can stay in a range. And Andrew explained he has the zone 1 through 4 until something crazy happens, right?
mhm.
And that's where you get these spikes. They don't last long, though. You got to be really quick to grab some puts up there or sell your calls. You got to be really quick. Just like in the video this morning, I think the specialist stole the opening, I have to say.
Didn't it have that feeling like all of
you
a
see
sudden
the
vol got bid a little
5-minute
bit?
and-
It felt like an old school rope-a-dope.
Well, look, I'm assuming this is real. They're showing the low as 101. Sorry, I'm getting off topic, but I wrote that NVIDIA's going to 113. I didn't think it was happening today. But yeah, here's the
Oh, wow, look
morning
at that.
opening. Nice. So the specialists need to get along this morning. Look at 1 minute. Come on, guys.
That's
That drives me nuts.
spectacular. Hats
That
off,
drives me
guys.
crazy. I'm sorry.
Hats off.
When you're back, right. When you're back in the day, sometimes you could benefit because you'd have your bids in way down there, so you'd make money along with the specialist, right?
Yes.
On this side, we don't really have that. Anyway,
Yeah.
So we really can't chart the VIX, is what my point is.
Right.
And
No, I
need-
mean, technical analysis on VIX is kind of fruitless. But VIX futures, which are the tradable version of VIX, there can be levels where that thing trades in and out of. Now, eventually, they all will go toward the VIX itself. But this is VIX futures term structure, and Andrew is actually gonna kind of give us a little taste of what VIX term structure means and why it's important, and how how he views it in terms of you going long and short, and then we'll talk about what course of action we can take.
Oh, goody. That's kind
You're
of
welcome.
exciting. I'm excited. Now, so VIX term structure. So basically, I didn't have VIX futures. I don't think Leisha did either. We didn't have VIX futures when we were floor traders. I think Mark, they were just developing it when you were but a wee lad way back in the day.
I was sitting. I remember when the VIX options were first listed. I was working next to Dom, and I remember we were all excited when the first VIX trade happened. But
and that was prior. They didn't have the futures invented yet, right? They had the options.
They had the futures.
It took a while.
So the futures came out. Nobody was trading them. Then Group 1 got the options. Then those started trading. Then there was one guy in the pit, and then the pit got bigger, and then the pit got bigger, and then the pit got bigger, and eventually that pit was in the old OEX pit. There were so many guys in there.
So
it is the even with how electronic it is, it's still the second busiest pit on the SIBO option floor.
Yeah, so there's some action there, right? So then, and you want to think of it like this: why is there so much action in this pit, right? So if you're a retail trader and you're thinking, okay, I'm sitting there, and why do I want to watch this product? The fact that it's the second biggest traded pit still on the SIBO floor means something. So there is information in the VIX. So what I tell my students, there's three things. There's three basic shapes, and it's market sentiment, right? So you have a contango sentiment. then you have a flat, what I call flat sentiment, and then you have a backward. So I'll just explain these real fast. So right now, I would say when the futures, and I'll explain what they are first and then the reasons why. So right now, when you have an August at 1830 and the back term is 1930, if you have within 1 point from back to front future, it's flat.
Yes.
I'm going to steal Russell's definition, but I think it's very good. This is from Russell Rhodes, but I think it's a good definition for, all right. So 1 point from back to front. Okay. And then the VIX cash is kind of somewhere around there in between.
Yeah.
Okay. Now, when I see this, my thought is from a market point of view, the market is throwing up its hands with vol. We don't know where it's going. So I look at it as VIX can move the straddle up or down between now and next expiration easily.
And the straddle is a good measure of volatility. That's the call, the cost of a call and a put on the same strike. If you bought both.
So what I think here is I think the options for the terms going out, usually I only trade the first 2 terms, but because of the election, Mark had a cool little election trade in trading desk, and we've been looking at election trades, but that's like you're looking at the action. So right now, August is a week away, a week and a couple of days. The straddle, the 19 straddle is even here. The 18 straddle is almost $3. So that's 15.21. So in my head, like right now, we're easily going to move that $3. So what I would say is this is fair to undervalue. There's different kinds of trades, but I say it's easy for us based on the term structure. You know, this week you got inflation data, all kinds of stuff. It's either going to be really bad or it's not. And right now the market is telling you, especially at least we just say like the market's telling you it ain't going to matter. Inflation data is not going to matter. I'm going to crush vol farther, which is hard to believe, but that's how it happens. Liquidity providers don't like holding options when they don't need
You're
it.
on camera.
At least you got your pants on, Scott, or is that your dad?
Scott.
So the second is contango, or let's go to backward where Mark was just talking about that. That is when the VIX futures are way below the cash.
And that would be where we were on August 5th.
On Monday, right? The 5th.
Yeah. So if you
my
go
assumption
historical,
there is that, right, is VIX is still moving higher. Now, there are a lot, trading VIX and backwardation is a total thing, because remember, all of the VIX options trade off the future, not the cash. So right now, when you're looking at what's going on, you see a 1921 VIX, the future is 1820 for next week. So the market is looking at all the options in August are priced off at 1820 future. It's not priced off at 19.
So Andrew, just go to futures term. This is real. We can show people exactly what this looks like. Just go to historical.
Okay.
And just change the date to August 5th. And it's clear as day.
Okay.
There's backwardation, everybody.
Okay, this was the close. Now, just because I assume, remember, every day that goes by when your futures look like this, every day that goes by, those futures are going to gravitate toward the cash by some fraction to expiration. So that is my assumption. So when you're in backwardation, another thing I would say is you don't know how long it's going to last. Okay. How long? Don't know. It could last for weeks, could last for months. This liquidation in the what do we call it? The carry bomb?
Yeah.
Lasted a day, basically, or 2 days. And then contango is probably what we'll see by the end of the week.
I mean, that's what we see the most time. Most of the time, you can go to like July of 2023 and you get a really, like July 2nd, 2023, and you get a really clear view of that.
So we'll go here. Totally opposite curve, right? All the
Yeah.
futures are above. Everything is melting to the cash. So you first have to understand what the tendency of the future is, how it's going to trade first, and then you set your trades up around that. You can have all the opinions you want about what you think vol is going to do, but remember the pricing of these futures changes a lot how you put a trade on because they have to overcome where they're priced. That might sound a little confusing, but that's sort of what it is. But when you're in contango, again, cash under future, VIX cash under future. Okay, my expectation is that VIX keeps going down.
Well, and then
right, and those futures are going to the cash. So the thing is there's some counterintuitiveness to the way these trade, and then we have it like trading desk and things where we're learning how to put positions on sort of based sort of where the vol curve is, and letting time play out, like letting the moves in the market play out. But one thing when you see about this, contango means less market action ahead. That's what traders are saying.
when we're
Flat
in
means
contango, the market
crazy
is probably going higher.
right. In contango, SPX probably going higher, backwardation probably going lower. And a flat market is like, I don't know, right? It's more, there aren't any clear signals. There's just a higher vol in general. And that's how I trade. That's how I look at the VIX futures curve like this, and it gives you information. So you take that information and do what you want with it. But
and using Andrew, if I can have the screen, using the VIX part of us as volatility experts, we are going to be launching one of our new cornerstone strategies on Wednesday, and I'm excited to discuss this on Wednesday night. This is the one stock that in the last 18 months has now outperformed NVIDIA, and we are really excited about it. And we've got a specific cornerstone trading strategy we're going to be launching with this stock, and we can't wait to talk about it. I want you guys to join me on Wednesday, and it's going to be Wednesday at 8 p.m. Eastern Time. Here is the link. I'm going to pin it too, so don't worry. Oh, and I already pinned it. Thank you, Hannah. So sign up.
get a double dose.
And believe me, we always educate you, guide you, and this is going to be worth your time. I'm very excited to be launching it. Andrew, I was going to come in and throw out the idea of buying the 15 puts for a quarter, like I did on Friday with the VXX trade people. We talked about the VXX trade. I've not done my VXX trade yet, but I did give them a little riff. I said you can buy the SEP 15 puts for like a quarter. They're already up 100%. But for if you believe in mean reversion and you believe this is just going to be a quick one account, one-off event, I like buying the September 14 puts for 20 cents. Buy a couple, put them in your back pocket, and if the VIX goes back to 13, those will go to 60, 70 cents, like lickety split, guys. Now, am I going to buy 1,000 of these? No. But will I pick up 5? Will I spend $100 on them and see where they go? Sure. So the trade idea I like, and I'll write this up, is the VIX September 18th, 2024, 13 puts for less than 20. Sell most up 100%. And that is our ticker highlight show trade. Do we put a number on that usually, Andrew, or no?
No. I was gone Monday, so I don't know what you guys did on Monday.
We didn't do anything. Oh, we didn't do anything on. We did like a spy fun little thing, but it wasn't anything official. I didn't put anything out like official. I just threw out an idea. All right, everybody. I want to thank everybody here for attending the Ticker Highlight Show. We've got to get over to Trading Desk. We're here every Monday at 10:30 a.m. Eastern Time. That's 9:30 Central, 8:30 Mountain, 7:30 Pacific Time. So for Leisha J. Leslie, the Queen of the Candles, the Duchess of the Doji, and of course, Andrew T. Giovinazzi, the Viking of Volatility, I'm Mark Sebastian. I am your only option. This was a highlight show. I hope you have a great rest of your trading day. Have a good one.